Hello out there in cyber accounting land. It's Professor Ebert here to help you master it quick. In this session, we're going to look at balancing the commercial bank statement. How you balance a commercial bank statement is similar to how you and I would do our own, with one big difference. When we identify reconciling items on the book side on one of these, we're going to have to make journal entries to fix them, whereas you and I don't have to do that. So let's look at the format of a basic commercial account reconciliation. The balance per bank will come to you either online or in the mail, and you open up your statement and its bank has how much they have in there as of that date. That's what this number here represents. On our books, what's known as the balance per books is really the ending balance in the cash account on the general ledger. Now, naturally, the two amounts are not the same because this one has information that the other one doesn't, and vice versa. So during the bank reconciliation, what we're doing is giving effect to what are called reconciling items that will get rid of the difference, and the two resulting amounts should be the same. Let's look at the ones that exist on the bank side. That first item there, deposit in transit, is talking about a deposit that we made after the bank cut off for that particular month. At some point, the bank's got to stop taking July deposits and start taking August ones. So that might happen at 4 o'clock in the afternoon, maybe on the last day of July. If we come over later on and put a deposit in, some banks are open until 6 or 7 o'clock at night, or else we do it with one of those mobile apps, and it doesn't get into the account until maybe 9 o'clock that night, the bank is going to pick it up the following day. So what we do, we have it in our amount, because when we got the money, we debited cash and a credit either went to sales or accounts receivable. So it's already in our number, but not in the bank. So what we do, we give effect to it as though it was. These outstanding checks are talking about checks that we've written to pay some bill, and the other party hasn't cashed the check yet. It could be on its way over to them still in the mail, or maybe they just didn't get around to putting it into the bank yet. So remember, we took them out of here when we wrote the check. When we wrote the check out, the debit went to either accounts payable or some kind of an asset account or some kind of an expense account, and the credit went to cash, so it's already out of there. But it's not out of the bank yet because the other person hasn't cashed the check. So what do? Give effect to it as though it had been paid by the bank. So balance per bank, add in deposits in transit if you have any, take out outstanding checks, and you have the adjusted bank balance. Now, over here. This is the general ledger balance for cash, which probably does not have some information that the bank balance does. Now, before we look at these, I just want to mention, nowadays when you have your account online, you might be making these adjustments through the month, in which case you wouldn't have to do them now because you'd already put them into your balance per books. In case you did not, you have to catch them at the end, which is what I'm talking about here. All right, so what's one of the adjustments? It's possible that the bank might collect a note for you by charging somebody else's account and crediting the money into yours. If they do, you'll see it either online or on your bank statement as what looks like a deposit. Now, the bank has it in their amount. We don't have it in ours yet, so that's why we're adding it in now. The same goes for interest income that the note might have made while it was in term, or it could be interest that's paid on the collected balance in the account. Once again, bank has it in their amount. We don't have it in ours yet, so that's why we're adding it now. A deposit error could go either direction. Usually it happens with cash. When I'm counting cash that came in, maybe for cash sales, if I put in more on my books than actually went into the bank, let's say it's supposed to be 300 bucks, the bank puts 300 bucks in, but for some reason I put in 330 on my books. All right, I put in too much. In that case, I have to minus out the extra $30. If it was supposed to be 330 and the bank picked up 330, but I only put 300 on my books, okay, now I have the opposite problem. I got to add in the extra $30. So that's why that could go either direction, depending on what happened. Same goes for a check recording error. With an accounting software, this should not happen, but on a manual system, it can. If I write out a check for $270 to pay something, and when I'm putting it into my books, I only put it in as $27. All right, I didn't take enough out. So I have to take the rest of it out here, assuming the bank paid the proper amount. I could also pay somebody a check for $270 and put it in my books as $2,700. Okay, so now I've got the opposite problem. I took too much out. I have to put the rest of it back. NSF is an abbreviation for not sufficient funds. What it means is a customer bounced a check on us. Now the bank's already kicked it out of this balance by the time we see this, but unless we adjusted for it during the month, we haven't taken it out of ours yet, so we've got to do it now. Finally, service charges that the bank charges us for clearing checks, putting deposit items in, etc. The bank's already taken out of their balance. We haven't taken it from ours yet, so we're doing it now. So the point of doing this is to see if the adjusted book balance is not the same as the adjusted bank balance. It should be, or at least very, very close. Now in real life, what happens, there are sometimes minor mistakes the bank makes paying a check, pennies. So the difference could be less than $1 between these two amounts. I myself let it go. Other people will try to find out where the difference is. Always remember this. If the difference is $1, I don't want to spend $50 of labor trying to solve a $1 problem. So a small difference, I'll probably let it go. If the difference is big, though, it can mean that there's a problem. If I have a very, very large difference here, I have to try to, maybe $500, $1,000. I have to try to find out where it is. So what we'll first do is look at all the deposits that we made and then check them against what the bank has. Not to point fingers at anybody, but if we've got a $1,000 deposit on our books and the bank's only picked up $800, it could be somebody took $200 on the way over to the bank and only put in $800. That can cause a difference. Less likely, but still possible, somebody could have changed the amount on a check, which is more easily done than you might imagine. I had the opportunity to see Frank Abagnale of Catch Me If You Can speak about 20 years ago, and he explained how they do it with freezing the check and then microwaving it so that the ink disappears, and now you have a signed check that you fill the amount in that you want, and if they have enough in their account, it's going to go through. So if somebody changed a check, it can cause there to be a difference between these two amounts. So it's good internal control to balance the bank statement promptly. Most banks will put on the statement, bank not responsible for errors unless notified within 5 days, 10 days, some reasonable amount of time. So we want to do this sooner rather than later. If I do all of my bank statements at the end of the year and I find a mistake back in February, well, it's too late to do anything about it now. But if I do it within a couple of days and there is a problem, we can take action. As we said, when you and I balance our checking account, we don't have to make journal entries for stuff we find out on the book side, but a company does. When the company does their bank reconciliation, the items that came from the book side will need a journal entry to correct them. Now, not the bank side, they're going to correct themselves. That deposit in transit will show up the very next day. Those outstanding checks will be cashed sooner or later by the payee, and then they'll go through the bank. But if we don't put the stuff onto our books that we found out with the bank reconciliation, it'll never get on there. So in cases where we had to add something, the entry will contain a debit to cash, the note. Bank collected a note for us, not on our books yet. The entry to fix it will debit cash and credit note receivable. It's very similar to collecting an account receivable. For the interest, we'll increase the cash account, that's the debit side doing that. The credit will go to interest income. Some people call it interest revenue, same difference. Now, deposit error, remember, I might have not put enough into my book account. The amount that went into the bank might actually have been larger than what I put in. In a case like that, I got to make my book cash go up. So I'm going to debit cash, and then credit will go to sales if it came from a cash sale, which chances are that was the origin of it. On the check recording error, this is for the situation where I took too much out. Let's say if it was a check for $270 and I recorded it on my books as $2,700, I took too much out. So what I got to do, I have to put the extra money back in. So I'll debit cash. The credit will go to accounts payable in most cases unless the problem you're looking at specifies that the check was to pay the electric bill or the water bill or something, and then you would credit utilities expense instead. Other reconciling items called for us to reduce the cash account. Now, in cases where we're trying to reduce the book side, we want to have an entry that'll have a credit to cash, such as these here. Just to review what those situations were, the NSF check from a customer was a customer who gave us a check to pay either an accounts receivable or a sale, and then when our bank went to their bank for payment on the check, they didn't have enough money. So the check bounced. All right, so the bank kicked it out of our balance. We have to take it out of our book balance now if we haven't already done so during the month. So the entry to do that is going to debit it back into accounts receivable. We're going to seek collection a second time. That's why accounts receivable is being increased, and then cash will be reduced. The service charge that the bank charges us, we're going to debit into service charge expense. Some people use miscellaneous expense. That's okay too. And then the credit side will go to cash to reduce the cash account down. The deposit error where I put too much into my books. Let's say I was filling a deposit ticket out and I put in $330 and there's really only $300 there. The bank picked up $300, but my books are too high. This adjustment here, what I'm going to do is reduce sales if it was caused by sales, which most of the time it is. And then the credit side will reduce cash for the same amount. The check recording error, this is the case where I didn't take enough out on the check. Let's say I wrote out a check, it really was $2,700 and the bank paid $2,700, but I put it in my books as $270. All right, I didn't take enough out. So here we're taking the rest of it out. Again, debiting accounts payable unless the problem is specific as to what the check was paying for, and then the credit side will go to cash. Once we give effect to these entries on our books, the resulting balance should match the adjusted book balance from the bank reconciliation. And once we see that, then we know that our cash balance is really up to date. As I mentioned, we want to do this sooner rather than later, because if there is a large difference in the two amounts, it could just be a mistake, but it could also mean that somebody has tried to steal money from us or did steal money from us somehow. So we want to do it sooner. Notify the bank if there is a problem because we might be able to make a recovery on it. It's good, solid internal control to balance your bank statement promptly. This is Professor Ebert checking out for this session. See you next time.